Good morning, everyone. Hope you're having a great 4th of July weekend with the family. This is Sean with Paycheck the Portfolio. Wanted to talk about the survey I put out earlier in the week. You can see that there's a neck and neck tie between portfolio breakdown, what I own and why, and this is how I borrow money to make more money. So today, I'm going to talk about my portfolio breakdown. In the next video, I'll talk about how I borrow money to make more money in arbitrage, my W-2 income and or borrowing to expedite compounding growth. If you're new to my channel, I just want to pull up a visual that I'll show pretty often. I don't live out of a traditional bank account. All of my W-2 income flows into my brokerage account. Once it's in the brokerage account, I buy dividend or growth assets with that, which I use to leverage, and I bridge the gap with margin to pay my bills. So essentially, I'm using a snowball method to invest all of my income instead of a percentage of my income. Most people, they get their paycheck, they pay their bills, and they invest what's left over. I take everything on the front end, invest it, grow my dividend assets that pay me weekly, monthly, quarterly, and then I bridge the gap between what my dividends don't cover with margin to cover my bills. And over time, that's going to compound and grow, which I'll show you here in a minute with the portfolio update. And in about 5 to 10 years, I would like to retire from corporate America and live off of the brokerage account. So that's the methodology. And we'll jump into the portfolio update. Then we'll talk about the specific portfolio breakdown and some other things today. Currently, my net account value is sitting basically at $123,000 there. Another good week in the market with the bill passage and just different things going on in the economy. So I'm up currently $34,000 or basically 15%. As of Friday, again, another good day, up about $2,000 there. If you look at my historical value, and again, I'm living out of this account, it's not stagnant, it's moving. There's money coming in, there's money going out. So you can see year to date from January, I'm up $15,000 here with expenses coming out, with growth. And that's the great thing. I get growth, I get dividends, and I get compounding in assets that I own as opposed to spending to nothing, right? When you go to Starbucks, you drink your coffee, which I love, by the way. And then you have to go buy another one, right? When you're buying assets, obviously you keep those assets. If you look at my 1 year, it's up 23,000, and 2 year is obviously more than that, but 1 year is really where I started fully living out of my brokerage account. So again, I try to be as transparent as possible and want to be completely transparent with that change. If you look at my estimated income currently, this will ebb and flow. Basically, the way that it works is it takes your last dividend payments and it annualizes those over the course of the next year. So I've been hovering right around that $40,000 range, $41,000 range. You can see currently I'm basically 39,421 there. Again, that's in addition to the growth I showed you. So I just showed you the historical value that shows growth, even with spending. And then on top of that growth, I'm getting dividends that I otherwise wouldn't have received in the first place. If you need help with this process or you're interested in it, I always post on my YouTube channels resources. I have a free starter kit here that you can click. And again, I post this so it's easy to find in the comments. You can book a one-on-one strategy call with me. We have a monthly membership in Discord that has tools and special calculators and just a strong community to talk to. And if you want a white glove setup where I'm sitting with you, lifetime membership, you can call me as much as you need to. I've incorporated that because I've had some people ask me for some intense one-on-one help. And so now I'm offering that as well. So let's jump into the actual portfolio. I'll show you transparently my positions, and then I want to talk about a specific example. I try to keep these videos right at 10 or 11 minutes, so I'm going to move fairly quickly through the portfolio, but you can see that I have an S&P 500 growth stock here. That's SPYG. I've been buying this forever and dollar cost averaging. If you ever see DCA, that's what that means, dollar cost averaging into this for many years. I've been investing since 2008 when my twins were born. And I've just been buying this over the years, and I consider this what I call an anchor to the portfolio. Same thing with McDonald's. I've bought for a very long time. As many of you know, I just got back from Japan. McDonald's was all over the place. Obviously, they're a global company, and they pay a pretty good dividend. So I own that company as well. CLM and CRF, that's Cornerstone, which I talk a lot about. They're a closed end fund that pay you a 18, 19% dividend depending on price action of the stock. And then they drip those dividends down at the NAV, which gives you basically free money every month. I talk about that in my prior videos if you want to check that out, about this the secret weapon to dripping at NAV. Essentially, that video talks specifically about that. I own Costco stock. We spent a lot of money at Costco as being a family of six. So again, I have growth stocks in here and covered call ETFs as well. QQQY is a covered call ETF I own, which you can see is way up there. I'm going to talk about this total gain or paper loss here at the end, just so you can see that NAV erosion, and people like to throw that lingo around and to try to discredit the strategy. I'm going to show transparently what that means and why it's often and pretty much every time overstated. QQQI is another covered call ETF. It's by Neos. QQQY is Defiance. So I diversify even amongst the covered call ETFs. You can see I have SPYI there as well. XDTE is a roundhill fund on the S&P 500. I have GOF, which is a more bond-related closed-end fund. They pay a 15% dividend, and they give you a 5% discount to drip at NAV. I bought NVIDIA during the pullback. It dropped down to, I think, $98 a share. You can see I grabbed that at 103 in April, and you can see how much it's bounced back, and basically a 54% gain there. So, you want a good blend in your portfolio of good dividend paying assets that can snowball and pay your expenses, and good growth stocks that can even compound it further. RDTE is on the Russell. That's a roundhill stock. You can see MSTY is a covered call ETF on MSTR. I talk about that one specifically in my video, how I get paid from dividend ETFs. I believe that was my second video I put out on YouTube if you want to check it out. I own Berkshire Hathaway here. I own YMAX, which is all of YieldMax funds to diversify there. Amazon I own. NVIDIA is a covered call ETF on NVIDIA. You can see oftentimes I'll own the actual company and the covered call ETF to kind of get the best of both worlds. I own AMZI, which is the covered call ETF on Amazon. QDTE, UPRO, TQQQ. These are triple leveraged ETFs. So when the market's down, and you can see in April, I was buying these triple leveraged ETFs at very low prices. And you can see that once the market snapped back and regained its 20, 25, 30%, now we're at market highs. These just went through the roof and allowed me to compound even quicker. It can be a very powerful strategy. If you ever need to sell a position because it's getting a little tight for you, you can buy back a third, less than that into UPRO, TQQQ, and it'll bounce back. And you're right back in the game, and you've opened up equity. You can see I have IWMY, which is a covered call ETF on the Russell. I've started to buy PLTY, which is a covered call ETF, and MST, a covered call ETF on MSTR. And you can also see Hui there. I've started to acquire. I always keep put options on for insurance to insure my account. You can see obviously those are red. Again, I bought 2 months out because we went to Japan and I didn't want to have to worry about it. I normally don't spend this much, but again, I didn't want to worry about it when I was gone. I sell covered calls. I sell cash secured puts to lower my cost basis, which I talk about in prior videos if you want to check that out. And those pay me premiums as well. So that's a transparent, high level, albeit quick breakdown of my portfolio. And I want to talk about QQQY here. Okay, so basically what I've done transparently, again, you can go into transactions. You can click on dividends. Okay, all dividends. And I'm just going to do 30 days so you can see it. You can click filter here. You can type in your stock, hit apply, and it'll show you all the dividends that you've gotten paid. If you go back to June of 2024 real quick here, and you apply that, basically on Excel, I've taken all these payments I've received over the last year, and you can see some pretty hefty payments there. And I've added them up here on Excel just so you can see all the payments I've received, which equates to $6,134.68. I'm going to go a little slow here because you're going to see in the comments about NAV decay and NAV erosion, and especially people that didn't watch the whole video. And so I want to talk about, what is that? Is it real? And is it still a good investment? So my total cost basis when I bought QQQY was $11,259.74. My unrealized loss on paper is $2,636.81. I'm going to show that transparently as well. So if we go back to portfolio view here, it's going to show you the paper loss. Okay, it's right here that I just called out, 236.81. Okay, total dividends received was $6,134. Again, that's the sum of all the dividends I've received right here in chronological order from oldest to newest. So the way you take true ROI is dividends received plus or minus unrealized gains or loss divided by cost basis times 100. So in my case, I had 332 shares. At the time, it was at $33.92. So my cost basis was $11,259.74. Okay. My paper loss, my unrealized loss, that means I haven't sold and realized a loss there, was negative $2,636.81. So when you look at my total cost basis is 332 shares at $33.92 a share equals $11,259.74. My unrealized loss, or my paper loss, is $2,636.81. My total dividends received, again, is $6,134.68. So when you do that ROI math here, basically you take $3,497.87 divided by my total initial investment, and you can see, even with quote unquote NAV erosion, I have a 31% return on investment with that calculation and that formula that's widely used by business professionals. So I hope that this video helped you. Please reach out to me with any questions. I look forward to talking to everyone. I'm enjoying the comments. Very passionate about this. I hope I'm helping you on your own journey. We're all in the same boat. And so I hope you have a great day, and we'll talk to everybody soon. Bye.